Good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com on Wednesday, September 24th. I want to go back to EMES here, Emerge Energy Services. Kramer was, I think it's an IBD 50 stock if I'm not mistaken. If I am mistaken, then it's not. Kramer was talking about this the other day on Mad Money. He really likes this, and ironically, I think he was talking about it on this day. And then it fell down below the 50-day moving average. So, so much for the Kramer effect. That went away like years ago on Mad Money. It used to be where, if you could buy a stock that Jim was talking about in the after hours, you were virtually guaranteed to make money the next day. Now, it just doesn't happen like it did. So you really just need to rely on Jim's analysis, which is generally speaking really good. In fact, from my view, and you may scoff at this, but it's okay, it's scoffable. From my view, Jim's analysis is always really good. And when I say from my view, it's because, I know some fundamental analysis. I know how to analyze a company fundamentally much more than you would probably think I do because I just look at charts. But let me put it this way. I have an edge when looking at charts because this is all I've been doing for almost 20 years. As far as the fundamental stuff, do you really think I have an edge? And by the way, do you really think you have an edge over the analyst at Goldman Sachs that's being paid $1 million to know all of the oil and gas equipment and services companies? Not the stocks, not to look at charts, but to know the companies. My point is, if you want an edge in your trading, learn to look at charts. Okay, the fundamentals, it's fine. They keep you warm at night if you know that the stock of a company that you own has really strong fundamentals. But to me, there's nothing fundamentally stronger and more rewarding than a stock with an uptrend. To me, that is a fundamental dream. This is a fundamental nightmare when it comes to trading. So anyway, let me get to this. Okay, so we got what looked like, hey man, maybe we're going to get a bounce off the 50-day moving average. Well, we didn't get that. Okay, but we've seen these types of penetrations a lot where a stock it's reliable support at the 50-day moving average, and then suddenly it's unreliable. Look at this. I was just thinking about this. Look at Expedia. Okay, we got the same thing. We got a pullback, and then now this is moving up. These don't trade in sync. They're totally different sectors, but the charts kind of look the same, potentially. So here's what you want to do with Emerge Energy Services. If you're long the stock, stay long the stock. I think you bought it at a really good buy point, but use Tuesday's intraday low of 107.75, even make it 107 even. Yeah, that's not an even number. Make it at 107. If the stock retraces to 107, that's, I think, about an 8, maybe a 9%, between 8 and 9% risk, which is a little bit more than I would like, but that's trading. Take a little bit smaller position, and then if the stock starts trading back above the 50-day moving average, then you increase your position. That's how you trade this type of thing. But I think this will work for you. Just make sure you keep a stop there, okay? Okay, a couple things. You're not going to be getting anything from me tomorrow because I'm in surgery, and you don't want to hear what I have to say after I come out from the Michael Jackson juice. So that's not going to work. Also, I know Gary, I think he's starting it tomorrow. Gary's going to be marketing our 59-minute trader workshop, which I'm teaching on November 1st, either live or Memorex. You can come to the event in Orange County. Love to meet you. Those are always fun. I was the one that said, hey, I want to do it live. I don't just want to do it over the internet. The last couple that we've done, which is a short a workshop on shorting and then one on options, it was just live streaming video, which was fine. It was really easy to do, but frankly, I kind of miss talking in front of people. I mean, if I'm going to be, yammering on for hours, I would rather do it with people looking back at me rather than a microphone looking at me, which is looking at me right now. So I want you to strongly consider coming to that, either in person, which I love that. I'd actually prefer it, or at least over the internet. because I promise you, you will learn some techniques that will be money makers for you. I promise you that. If you use the tactics that I'm showing you in the way that I'm showing you how to use them, it's almost not even fair. It's really almost not even fair. You can make money trading the opening hour. So I want you to consider doing that. Gary, you can't sign up for it now. Gary will get you more information on that, I think, tomorrow. So that's all I have to say without wasting your time. See you next time.